And we are live. Welcome, ladies and gentlemen. Today is the 8th of November. Uh, for the sake of clarity, I'm not Burp. Normally it's Adrian, Crypto Burp, who is doing the live streams on Friday. He is flying. I'm covering it today. Hope you guys are all doing well. Let me know in the chats if you can hear me. Let me share my screen right now. Let me know if you can see the screen, because we have a lot of things to talk about, mainly about Ethereum and altcoins in general, and why I think we are on the right track, but not there yet. I know there's a little lag of a few seconds, so I will wait. Loud and clear. That's exactly what I want to hear. Phenom, however I can pronounce your name. Thank you so much. You're a legend. So first, overall context. How does the market actually look like? Believe it or not, although Bitcoin is making a really good move, there are still plenty of altcoins, plenty of them. I mean, many, the majority of them are still trading below their 200 MA, which is incredibly, and it's actually a lot. So this is really one of the few breadth charts you can get online, probably the only one, to be honest, in this form and shape. At the moment, 17% of all Binance USDT pairs are trading above the 200 MA. It means the majority is still trading below that 200 MA, meaning there's still a lot of weakness. They haven't reclaimed such a significant level. Normally, you could say nothing really good can be expected from something that's still trading below their 200 MA. But it can recover, just like it recovered in May, just like what happened in January, February. I believe this number will go up over time. And one of the few things that can hint this is the amount of altcoins that are trading right now above that 20 MA. So at the moment, as we speak, 70 are trading above their 20 MA. So it means that there are a lot of coins in the recent days. My interpretation is they're actually whipsawing, but the more they are whipsawing, probably the better, because eventually there's going to be some compression between the 20 EMA and, or sorry, I should say MA, and the 50 MA, and finally, eventually, the market will make a decisive move when it comes to altcoins. I'm betting on altcoins. However, I'm still very heavy in Bitcoin still. And my plan, my personal plan, Jimmy's plan, not Adrian's plan, my personal plan, I'm going to sell all of my Bitcoins and rotate fully, I mean 100% in altcoins. I'm going to make that bet. I'm happy to do that. I think it's worthwhile the risk. However, I think we are not there yet, and I will explain this in a bit. So we had two big events. One, the elections. Secondly, we had the FOMC. And let's start with the latter. I shared a tweet yesterday, and I think it's worthwhile to go quickly through it because I want to give you guys a little bit of context. One, yes, it's important. It's good to have interest rate going lower because if that happens, it's easier for us, for consumers, to get a to get cheaper money, which could, create some extra liquidity. But it's not the same as quantitative easing. We are still in the quantitative tightening phase. At the moment, the 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 Fed are still taking this monetary policy where they actually pull money out of the financial system. Good things often happen, especially in the altcoin market and markets in general. Good things happen um, when the Fed injects money into the financial system. This is at the moment not the case. At the moment, they have like a cap of 60 billion, 60 billion dollars that they're actually pulling out of the market. Eventually, they might go to like a more more dovish policy, and when the quantitative easing starts, that's actually when the real fun is going to start. You can find this information very easy. It's not something I made up. It's just by reading. I haven't seen anyone really talking about quantitative easing and tightening yesterday. People were really very quickly in euphoria because of the rate cuts, but it's not only the rate cuts we want to see. We want to see less quantitative tightening and going more into quantitative easing. You guys can check it here on the website of the Fed, and they have this implementation note. You can read this here. They are actually telling you every month they're actually pulling out 60 billion, 60, out of the financial system. Eventually, we want to see something else. We want them to cut the rates, having like continuous rate cuts and quantitative easing eventually. Another thing, we had the elections. And if you voted for Trump, congrats. If you voted for Harris, hope you guys can unite. I'm not, personally, like a Democrat or Republican. Honestly, I'm from the Netherlands. I really don't care what's happening in the States, as I do care more what's happening here in my own country, in my own, in my own zone. But from a market perspective, most often, very often, what we see is after the election, there is a kind of a relief. Like people are happy because there's more certainty when it comes to monetary and economic policy. So often, what you see after an election, all the yellow things here, they are actually representing like an election. Here it went up, here it went up. There are actually two instances where we had a really big dump, and that was because one asshole, Bush, probably because of the war he started, and not sure what else there was in that time between 2000 and 2007 was basically the financial crisis. So we had like this big two dumps just after this election. It quickly dumped, and here, like a few months after his second term, the market tanked. But ever since, after each election, up, we went here, up, we went here, up, and most likely, I mean, the business cycle is like a really strong secular uptrend, and I'm not gonna fake this. I'm not trading the S&P at all. Tried a little bit in a few in before, but I'm totally not interested in trading this. This just gives me an understanding how what the risk on a sentiment right now is. Also, really good to know. Like you have like a presidential year or term, right? Like it's 4 years. The most bullish year often is the third year. The second best year, if measured since 1960, 60, the first year is the best year. So the second best year. Sorry, the first year of a new traditional cycle is the second best year for the markets. So I'm expecting a lot of good things in the coming months. We know that Trump has announced some things that he that's quite good for Bitcoin and crypto in general. So let's see if he can keep his promise. At the end, he is a politician, and politicians are really good in one thing, and it's making promises. If I can promise you one thing, they were gonna keep up with promises. So let's see if he really has the power to fire Gary, and if he really can, create that Bitcoin reserve. This here is another chart I want to show. I've been sharing this often because this is actually my main thesis. It's actually very simple thesis I have. This is the 4-year cycle based on my own methodology. So what I did was I connected the lows with the lows. So every cycle has a low, right? And for a cycle analysis, you want to connect the lows with the lows. You do not want to connect the halving events with the halving events, or the high with the high, because that's not how it works. If you go back to the real OGs when it comes to cycle analysis, for example, Hurst, one of his principles is to do this based on the lows for a few reasons. And one of the reasons is the lows is also really easy to see on the chart. So if we connect all of them, we can see that the duration between the lows is around 1030 days, or I should say, let's go to the monthly chart. That's around 47 months. 47 months. And the time duration between the low and the high, funny enough, this is pretty consistent in the last few cycles, is 1065 days. So from the low to the all-time high, it takes Bitcoin, more or less, 1065 days, 35 months. The recent low, like the cycle low we had, was in December 2020, which means that if we're gonna add that the same duration we had, the next cycle low might happen in November 2026, and the next all-time high might happen somewhere in end Q3 or Q4, somewhere in October, maybe even November, maybe September. Nobody knows, but it gives you an idea. If this plays out, that would be really awesome. It means that there is still a lot of opportunities. Also, from the halving events, we could easily see that normally it takes Bitcoin more or less, especially if taken into consideration the last two halving events from 2017 and from 2000. It takes Bitcoin 520 days to go from the halving event to the all-time high. Of course, the halving event is, again, a non-binary event, is an event for the next coming 4 years, next 210,000 blocks. So it's going to really take a lot of time before the market actually feels that shift in supply and demand. So all with all, this looks really bullish. Also, after each halving event, we had a consolidation phase of more or less 180 days. I've been saying this like for months and months and months. We had it here, we had it here, and we had it here. Post halving consolidations are supposed to be very boring. They are supposed to make you tired. They are supposed to create time capitulation. They are there to suck the energy out of you. These are not really interesting times normally for Bitcoin, and it has proven itself again post halving very boring. So now what's next for Bitcoin? What do I see here? I really believe that once Bitcoin is making a move after such a long consolidation phase, and if you think about it, this here, Bitcoin has been consolidating for a long time. We had like a consolidation phase here, and this is what I would say the longest consolidation phase we ever had. People are saying that this one is the longest consolidation phase. No, it's really this one. And see what happened here. This, it took Bitcoin 280 days. Here, it took Bitcoin around 240 days to break out. 280 days. So what happened after 280 days? A good breakout, another consolidation phase, and then a very good breakout, consolidating here and then here. So this is actually a really good base, and this price action here really reminds me to the price action we had in 2023, also from March till October, and then we had a breakout end of October. I believe this entire price action here actually sets the base for the next leg up, and that's why I believe very unlikely we're gonna see a retest back into this zone, because often when Bitcoin is consolidating for a long time, it doesn't give you really pullbacks. Here, look at like even the 1 hour chart. Long consolidation. Where do you see the perfect textbook retest? Where? You don't see, because after that breakout, often it doesn't give you a small move, meaning it doesn't move, insignificantly. It will move in proportion of that entire consolidation phase. Secondly, it's not going to give you that classical retest, a bullish, or I should say, like a throwback, like this. People often say, like, when price breaks out, it makes a retest, and that's where you enter, and then it goes up. I don't believe we're going to see such a thing. I could be wrong. I think that scenario is unlikely as of now. I could be wrong. We could still dip into this range high of this entire consolidation phase. But I think the next step for Bitcoin is to continue grinding higher and grinding higher. We have a question from Louis. My friend, how are you doing? Good to have you here in the show. Hi, do you think Bitcoin will follow the silver chart on the daily, since the previous silver high? It would have been a 68K Bitcoin. Honestly, I really don't know. I haven't charted silver for a long time. So I can't really tell you. I could quickly check how silver looks like. Mm, where is it again? Honestly, I wasn't even. Oh no, it hasn't made an all-time high. I mean, the silver looks okay. Honestly, I have like a zero exposure on silver or gold, to be honest. But yeah, it could be. So that's Bitcoin. I remain very bullish. Also, again, like the key takeaway, often after such a long consolidation phase, do not expect a classical textbook throwback like this. It doesn't often happen, really. Buying here, when it breaks out from a such a structure, often continues going up. Then now you might ask, okay, what's next for Bitcoin? What are your targets? I am a simple man, so my methodology is just plotting a fib from the previous cycle high to the cycle low, and then we have that 1618 extension. This here is my it could be this is for now my target for Bitcoin. 170K sounds really far away, but that's just another 2.5x. Of course, we need a lot of liquidity to, well, 125%. We need, of course, like a lot of liquidity to get there, but also bear in mind that only 0.3% of BlackRock's asset under management sits now in their Bitcoin spot ETF. 0.3%. Imagine that this number is going to double to 0.6 or even 1%. That's a lot of money. And you know, guys, how it goes. BlackRock does something, other people, other parties, they will follow. For me, like the short-term target for Bitcoin is also by applying the FIPS range high to range low. You could skip this week because I think that this was like an extreme reaction on Japan. It brings me here to 90K. That's based on the FIPS. And then we have this very easy classical way. Just measure the distance, add it on top of the range high, and this brings you around 100K. So I believe somewhere here could be like the next target for Bitcoin, and then it might want to consolidate for a while, just like what happened here. And then we will see what happens. For now, Bitcoin is in price discovery. Very good news. Before I gonna move to Ethereum, I want to start first with the Bitcoin dominance. Everyone talked about this, the Bitcoin dominance. What do we see here? I see here a lot of things. By the way, guys, I do this, guys, for you. This is like a new layout. If you guys find it more um, easy for the eyes, let me know. If it isn't, I'm just gonna stick with the black, with the white, because this is basically what I'm using also for trading, and never really use a black background. But if it is comfortable for you, let me know, and I might want to use this black background for you guys. So we see here this rising wedge. Maybe we're gonna see like this could be like a fake out, and we might see the dominance going down. There is also a very strong bearish divergence on the weekly, but there is one thing I want to show, and that's the relationship between the halving and the Bitcoin dominance. And I don't see a lot of people talking about this, honestly, not at all. I haven't seen anyone talking about this, but often what you see here is it takes the dominance more or less 250 days, 250 days before the dominance drops after the halving, 250 days after the halving. We have seen it here. That was basically your alt season. We have seen it here. This was basically where, you know, alts outperformed Bitcoin. And now we are not that far away from that 250 day. That brings us around. Where does it bring us? It brings us to, that would be December, or maybe the start of Q1 of the next year. So I believe we are not that far away from seeing the Bitcoin dominance getting a good hit. That's basically what we all want, if I'm not mistaken. Let me know who wants to see the Bitcoin dominance going higher. Because for this, you are then, you know, 100% fully allocated in Bitcoin. The reason why so many people, why there isn't so much euphoria, is so many people are too heavy in altcoins. And honestly, this year, Bitcoin outperformed many of the altcoins. This is the Bitcoin dominance without the stables. I believe this is the more like a pure form of the dominance, because you do not want to take into consideration stables. Stables are really good for a big chunk of the, you know, entire market cap. At the moment, it's sit now on, you know, 63.8K, 8%. It was sitting on 65.4%. We see that the dominance is dropping here. That's really good. I want to see continuation for me to feel really comfortable enough to rotate more into altcoins. This Bitcoin dominance sits on 75%. You might ask me like, why, Jimmy? Why is it 75? Why is it so different? And why do you use actually so many different Bitcoin dominance charts? Well, it's actually all for context. I want to see confluence. Here we can see again that after the halving event, it took Bitcoin around 250 days before we got this very significant drop. It's also where where there was a lot of quantitative easing going on in this period. I believe this might play out again. This is not really a chart. If you would see this chart, you are not aware that this is the, what I would say, like the real pure Bitcoin dominance chart, because it takes out the dominance of Ethereum and the stables. It sits now on 75%. This is not really typically something that I would say, okay, this looks really weak, let's short this. This looks pretty strong. I want to see the dominance really below this purple box for me to feel comfortable to rotate into alts. And if you're not into Bitcoin, for example, because I'm going to rotate from a Bitcoin, I'm going to sell every Bitcoin, everything. I'm going to fully rotate into altcoins. For me, to do it here, it's a little bit risky. I want to see more confirmation, and that confirmation would be for me closing below this purple box. This still looks strong. If this would be your favorite altcoin, and then ask yourself, is this something you want to short or long? This is definitely not something you want to short. You want to wait for confirmation before you're going to short this. Now, let's talk about Ethereum, because I believe the weekly chart looks pretty good for a few reasons. Yes, we had this filled rectangle. Yes, we got this very strong drop. And yes, by the way, this is the way how to find like a target for this filled rectangle is, again, measuring the distance between the range low and the range high, add it here, and this here, this is your target. It played out beautifully. It tapped into this major multi-year support zone. This is just not a support zone, by the way. This is, you could even go as far as here. This zone, you know how old it is? It's 1,000 days old. That's a lot of weeks, like 135 weeks. This is a multi-year SNR level, as I believe you could easily do this, or that would make it even older. So this is a significant level. We got a good wick here, a good wick, or it reversed here. I wouldn't say a good long wick relative to the body, but still. And now it's here at the previous range low. Now support returned into resistance, but look what's happening here. Also, look what's happening here with the MAs. These are the EMAs, the 12, the 21. It's compressing here. And what do we see here? What do we see here? They crossed. The 12 EMA crossed the 21 EMA. The 12 and the 21. This is maybe not relevant for now. Now, we might see something else, something similar happening here. The 12 crossing the 21 EMA. This can happen in, let's say, in 1, 2, 3 weeks. It's not only that. It's also this here, from here. If you add this line here, this is a typical classical RSI breakout. This is an RSI breakout. And look how beautifully it crossed the 50 level. This is an RSI breakout. This is one of the ways how you can use RSI, by finding high time frame breakouts. You could use this data point as well. It might give you, basically the same information. But here we see something else. This is the weekly chart. This is a what? This is a MACD cross. We haven't closed the week yet, But if we're going to close like this, a MACD could be used as a signal. I do not use this as a signal. I rather want to use this as a confluence. It's nice to have, and it's very nice to have this confluence. To be honest, I mean, the last time it really signaled that signal was in October, slightly later than when Bitcoin made it move. It was first Bitcoin making the move, and then Ethereum, and we might see the same scenario, the same situation playing out. And this bull cross here is extra relevant, and this is a TA trick. This bull cross here on the MACD is extra relevant when the price is trading above the 21 EMA or the 12 EMA. What do we see here? What do we see here? It rejected from the 12 EMA, 12 EMA, rejected from the 21 EMA, here as well. But see this candle here. This is very promising. This is very promising. This is not something I want to short. I haven't sold my Ethereum, to be honest. I was disappointed. Yes, I am more heavy in Bitcoin than Ethereum. Still, I believe in Ethereum. I think it's basically the mother of all altcoins. As in, so many things have been built on Ethereum. It's slow, it's expensive, I know, but still, you cannot fade Ethereum, I believe. Also, if you go to the daily chart, what do we see here? It's now inside that, what I call like a filled rectangle pattern. Also on the 12-hour. By the way, I just recognized that this might be not big enough for you guys. This line was basically what? It was the range. This used to be support here, and now it's back here again. So I think the path of least resistance for Ethereum is to grind up slowly and forming a range somewhere between 3K, 28K, 3,000 and 2.8K. Does this make a little bit of sense, ladies and gentlemen? Let me know why I think Ethereum looks good. Also, see this trend line still intact. I mean, trend lines are actually, meme lines. You cannot, add too much value in it, but it's always nice to have it as a confluence. So this is a really significant confluence we're seeing here on the weekly. Let me check what the Debunking Pro is saying on the daily. On the daily, the Debunking Pro signaled here a bull signal. So it means it's trading above the trailer. So see above the baseline, which is another way of how you could see it as a moving average, but more advanced. This is not how a weak coin looks like. This is how a coin. What we're actually seeing here is we are actually seeing here signs of reversal. Sorry, I was trying to find my words. It's a little bit sleep deprived. We are seeing here signs of reversals, and a few. Again, let's go through them again. One, it's the what? Trading above the 21 EMA. We have here the RSI cross. It crossed this trend line. Yes, it's on the logarithmic. It's trading above the what? The 50 level, and we have this MACD cross. Also, if you go to the weekly, and you have the RSI, another thing how you could see this is like bad things often happen when it's trading below the 50 level, because that's what I'm doing here. This is another way how to use the RSI on the high time frame. And here it temporarily traded above the 50 level. And good things are happening often when, especially here, what do we see here? The RSI trading above the 50 level. Can you see it? This was basically trading here above, but still, the majority of it was trading below. This was your bear market. This is your bull market. This is your bear market. This is bull market. This here, this is your confusion, and it confused me as well. Not gonna lie, this confused me as well. So all with all, I believe this looks pretty good, and I wouldn't be surprised to see this trading here again back at the range high of this field rectangle. And really, we only need 3 weeks before to get there. It has proven itself right here, right in February. 1, 2, 3, range high. Here, even like 2 weeks. 1, 2, range high. That's a 40% move. Ethereum could easily do a 40 or a 50% move in 2 weeks. Very easy. This is the Ethereum Bitcoin chart. I was wrong here. When Ethereum against Bitcoin was forming this bullish divergence, and it went up, formed here like this bullish divergence, went up, and then it broke this multi-year support level, and now it's sitting on this very significant support level. This is not just a random level. This has some significance. This is almost 3,200 days old. This level is almost 3,200 days old. That's a lot of time, ladies and gentlemen. See how this level acted as resistance, resistance, resistance. This was like whipsawing. Another way, how you could trade this is when this is just another RSI, trick. Also, the way how Wells Wilder used this. If you see the RSI crossing below the 30 level and then crosses again, that's your entry. When the RSI is crossing below the 30 level, you do not want to buy when it's below, because the momentum is really bearish. Like when it crosses the 30 level again, from below to up, like this here, like this way, that's actually telling you, okay, the RSI is telling us there is some, momentum, like bullish momentum kicking in. So this also has all the signals, signs, not from the MACD, but more from the RSI, signs of reversal. So this looks good to me. Thank you so much for your patience, my friend D. Just Gouda. Chainlink. What do we see here? Wait, let me go to my Binance chain. Yeah, this one. Yeah, I missed that. I am a big fan of swing failure patterns. We had a very significant one here in May 2023. I added here to my portfolio link. This was another swing failure pattern, happened in August. I missed this one. And I don't really think that I need a lot of link, to be honest. But this here, what do you see here? What is this? Why is it showing the volume profile? What do you see here? Long range, broke down, bearish retest, couldn't reclaim, might want to reclaim. But honestly, I'm not really interested in link. If it reclaims, that will be really nice for a breakout trade. If it's going to break out, or wait for the retest. Let's see what the bear market pro is saying. This is here. This is here your bull signal. This is here basically your stop loss if you would trade this on a 12-hour. We want to see a reclaim of this green box for a long position. I'm myself, I'm not interested in trading link or adding it to my portfolio. Hope this helped a little bit, the Just Gouda. There are actually other few things I want to share with you. So we talked about the quantitative easing. Rate cuts is not the same as quantitative easing, period. Anyone who's telling us here that it's the same, no, it's not the same. Rate cuts might lead to more liquidity in the financial system, but it's really quantitative easing that makes the difference. That's one. Um, so next time, before you just follow your favorite influencer, just take that extra step and be, stand out from the rest, and just check the things for yourself on um, on their own website. Um, Secondly, I do not believe more anymore in this so-called path to all season concept. Might break your heart or your hopes, but I'm not here to sell you dreams. I know a lot of people are very happy to sell you dreams to get a lot of engagement. I do not care about engagement, really. I'm doing these videos. I'm not even, editing them. I'm just giving you this video like raw, and my content very raw, and my thought process also very raw. You see what we're seeing here? Phase one, Bitcoin, flow of money moves into Bitcoin, causing price surges. Yes, that's true. Phase two, Ethereum. Ethereum is outperforming Bitcoin, and we hear talks of the flipping. Yeah, right. The flipping won't happen. Phase three, large caps, and then phase four, alt season. Now I'm gonna tell you something, and let me. I tackled this like a few weeks ago, last week. Um, Bitcoin holdings in publicly traded and private companies, ETFs, and countries, as of now, 2.6 million. 2.6 million Bitcoins are now in the hands of ETFs, publicly traded and private companies and countries, by the way, which is 12.45 of the total Bitcoin supply. Now, you need to realize the current circulating supply sits now at 19.7 million bitcoins. 3 million bitcoins are lost. Okay, these are like dead bitcoins based on chain analytics. The 1 million bitcoins of Satoshi Nakamoto, it's locked forever. And then we have people who lost a seed phrase, cannot access their devices anymore. Um, they don't have any access to their Bitcoin. So the real total supply is actually 19 million. So 16%, 1/6 of the total of the real current supply is 16%. This 16% of the total of the real current supply will never ever rotate into altcoins. The Bitcoins hold through these ETFs, these countries, the public companies, the private companies, the mining companies, maybe DeFi, but that's not really relevant. That's a small portion of all of Bitcoin. All of these Bitcoins will not be sold for silly altcoins. Honestly, no, this will not happen. Do you see a client of BlackRock or Fidelity saying, "Oh, you know what? Sell that spot ETF. Give me the money, and I will buy instead, crypto from a public exchange." No way they're going to do that. Absolutely not. Just assume that um, the 2.6 million bitcoins, these bitcoins here, they will never ever rotate into altcoins. Maybe some of them, the ETFs, some of them, they might want to rotate into the Ethereum ETF, maybe in the future Solana or XRP ETF, if they will come in, I don't know, probably in 1 or 2, 3 years from now. But never ever they will rotate into altcoins. As of now, I do not believe this. Also, um, we need to understand how big BlackRock actually is. BlackRock has an asset under management of 10.5 trillion. 10.5 trillion. 10.5 trillion. That's an insane amount of money. And only 0.33% sits now in their Bitcoin spot ETF. 0.33%. I know they're pushing the digital assets a lot. Um, the Bitcoin spot ETF, also the Ethereum spot ETF. I believe this number will only get bigger. I believe in maybe a few months from now, it might be even like 1% or 1.5%. Even doubling this would be a impressive performance. Here, this is the website. Here you can see all these ETFs. And again, the world is bigger than the US. There are other ETFs in Canada, in Hong Kong. This is good. They are good for 30. Let's round it up. 34 billion. 34 billion. So of the 10.5 billion assets under management, only 34 billion sits in their IBIT, in their Bitcoin spot ETF. I believe this number will only go up over time. Reason why I believe that this entire concept of Bitcoin, Ethereum, logic as altseason, it's outdated. I do not believe in a full-blown bull market. I do believe that those who are holding Bitcoin, scooped Bitcoin up when it was trading at range low, or holding it since 2017. Of course, they have a lot of purchase power to buy altcoins. I still believe in altcoins. But to have this similar altcoin, full-blown altcoin market, just like in 2017 or 2021, I think we will not see the same thing, not in the same shape or form. I believe we're going to see a very different game. Probably some of the narratives will do very well. I'm not gonna fake memes, but I still believe myself in deepin, AI, real world asset, DeFi, maybe gaming a little bit. I'm not a gamer myself, to be honest, so I don't have really a good connection with a really good feeling with the gaming industry, especially not on the when it comes to blockchain and crypto. So don't let other people sell you dreams, or your dreams, or what you want to hear. You want to hear what you need to know. There's a difference between your wants and your needs. There's something you need to know. It's not and don't don't blind yourself because one influencer is telling you alt season is coming, we're gonna benefit. Everyone is going to benefit from this. No, definitely not. This is not going to be the case, I believe. I do believe, we're going to see in the altcoin market, but again, some certain narratives, they're going to benefit from this. Maybe even like the large caps when retail is coming, but definitely not a full-blown bull market. Because the liquidity, the capital needs to come from those who want to sell their Bitcoin for alts, or those who are sitting on a big pile of used unstables, or new fresh money entering this market. Do we have any questions? Ladies and gentlemen. So my key takeaway is quantitative easing. Rate cuts not the same as quantitative easing. We need quantitative easing. Fed will continue with rate cuts. As we can see here, 80% of all time of 80% of all cases after an election, we see a good move up to the upside, at least here on the S&P. Ethereum looks really promising here, even if it's going to consolidate here. I do not want to see this closing below the 21 EMA, especially not below the 12 EMA. A little bit consolidation here below this SNR level, because we can consider this as a very legit SNR level, would be fine. Or like consolidation, making that flip and then consolidation above or below, it doesn't really matter. But the Ethereum looks really good from different angles. Again, the MACD cross, the RSI where is it? I thought I the real line here. You could do it like this or this. And why I'm doing this? Because I'm actually trying to measure the trend from this low or from this high here. So that's why some people they want to do it like from the highest point of the RSI, but I rather prefer to do it here because this move here was basically the high, and from there we went all the way down. Um, Ethereum, Bitcoin looks good as well. This is total three without stables again, without stables. So total three gives you insight in the total market cap without Bitcoin and Ethereum. And in my case, this is also without stables. Anyone who is interested in this, you can copy and paste this. And by the way, guys, I have a really cool announcement to make. We're gonna celebrate our trading congress in a few weeks from now. We have invited big names, key industry leaders. We're gonna organize a lot of workshops, a lot of cool things, a lot of giveaways. Check the description. You can join the Discord community during that time for free, so you don't need to pay anything. You don't need to give your credit card details. There's really like nothing you need to do. You just need to have Discord. You can join us. You can benefit from many of our trades, our educational content about our trade setups, and so forth and so on. So check the description. You can put yourself in the waiting list and you'll be informed very soon. And last year it was a big success. The years before was a big success. And this year is going to be a blast. So check the description below. And by the way, since you are still listening to me, hit that like button and share this with your friend. If you like this content, if you appreciate it, or if you agree with this content, let me know. If you do not agree with any of my thesis, let me know as well. Um, yeah, to circle quickly back to the total three, what do we see here? Yes, this is a range. And I would classify this as a typical bull flag. And this might be the breakout of this bull flag, wanting to go higher again without the stables. We were at the top here at 1 trillion market cap. It's sitting now here at 494 billion. This is not something I want to short. If this was a coin and someone would ask me, hey Jimmy, short or long, I would definitely sorry guys, I would definitely say I want to go long here and not short. So this looks cool as well. Okay, ladies and gentlemen, thank you for tuning in. See you next week, and do not forget about the description. There is some real alpha from CryptoBurb, from the rest of the team. We're going to share this with you. We're going to spoil every single one of you. So make sure you subscribe and make sure you put yourself on the waiting list. It won't cost you anything, not even a penny. See you guys next week. Have a fantastic weekend.